if you look at the 10-year and you look at the short-term duration that I have, which is called my trade, that's 2.37%. So the 10-year yield is inside of that, right? So it's under that. So from a trade perspective, the 10-year yield is bearish. So is reflation, but reflation is also bearish from a trending perspective. 10-year yield on a trend perspective, trend, different than trade, equals 2.06. So this is typically where markets have a bit of an argument, is between these two durations. These are, again, day trading charts. Did I spell that wrong? That's embarrassing. Maybe I should have another red stripe month. A little red stripe month. I'd actually be having one right now on the golf course. That's how I roll. But the reality is that this thing is bullish. And let's just to be clear, throw a little red stripe on this thing. This is bearish. Now this looks to me like Wall Street's consensus, is that because they were long reflation, and reflation is clearly breaking down from a trade and trend perspective, they've imputed that to being bearish on growth, on trade, and potentially trending perspective. So what you saw last week, and you've really been seeing throughout the last 2 to 3 weeks, is that Wall Street, the Atlanta Fed, Bloomberg consensus on GDP has been going down. Bond yields have been going down, gold's been going up, and the yen's been going up. So that's an interesting setup because now this provides us a nice landing area where the trend is your friend from a growth perspective. So again, when you look at bond yields, a lot of people look at inflation, they look at growth. I look at both. That's why we call it our GIP model. So GIP, growth, inflation, policy model. So again, if you get both those things right, you tend to get a lot of things right. So what I think is going to happen here is we're going to have a wonderful opportunity to be buying quad 1 assets. Quad 1 is not quad 2. Quad 2 is where you own both growth and inflation. Quad 1 is where you don't own inflation. You're short it. You're short it. You're short XME, metals and mining, ETF, copper, etc. And you are long of real growth, which includes stuff like this. The NASDAQ, real growth. High-end consumer, or XLY, you could add that as well, consumer discretionary. So that's what I want to make clear now that I'm back from the vacay month.